Bitcoin is currently retesting the upper band of the Gaussian channel on the one-day chart. This is an absolutely crucial level Bitcoin will need to hold and bounce from if we do want to see any sort of continuation upwards. As a consequence of losing the upper band, Bitcoin could result in a continued crash towards 25.2k. In today's video, we're going to be running a complete technical and structural analysis across a multitude of timeframes to discuss the next move. Let's go ahead and jump in. Okay guys, welcome back to the channel. I hope you all have a fantastic day today. We're here to talk about Bitcoin as we are in quite a critical position. We're currently retesting the Gaussian channel upper band as well as the 50 EMA on the daily chart. These two indicators representing a overall support but a potential shift in the higher time frame trend if lost, and these shifts are not to be taken lightly. We'll show you in today's video historically how accurate these indicators have been in determining the continuation of current trends. But before we get into it guys, smash the like button, hit the comment button, and of course subscribe to the channel. We do daily videos focusing on the technicals, the structural analysis, the charts, the data, the facts, no emotion, no hype, no BS, pure raw probabilities, statistics, and TA. If you want more content like that throughout the day between our videos, join us on Telegram. The second link down below, you've got access to charts, updates, analysis, information, videos, educational posts, and so much more. If you're interested in joining our VIP, where we have daily trading signals with exact entries, exact targets, exact stop losses, exclusive analysis such as this ARB signal, 77% profit since posting less than 12 hours ago. If you want more information on that, you can go ahead and contact me via this message here, find our entire trading track record over here, and of course, you'll get access to two channels, our main VIP channel, and of course, our exclusive group chat, where we have a couple different group chats going on simultaneously to help you guys become better and more proficient traders. Let's get into the video, guys. So much to cover. We'll start off with the market data as per usual. Currently, we are seeing liquidations up 37%, around 60 million, and of course, 24-hour volume flying upwards just around 10% as we approach the end of the weekend and now the new week in Australia. Sitting at 59 billion. April is currently down 2.47%, still currently in the red, and of course, our volatility index is more or less holding around about where it was yesterday. So 2.1% for the 30-day period, and of course for the 60-day period, we're holding around 2.94%. We have seen a drop in volatility over the last 60 and 30 days, and that is not because the volatility has dropped, that is because the period, the date range of the volatility in which it does account has been reduced. We had a significant surge in volatility here. As we pass this point over the 30 and 60-day period, naturally we are going to see a drop in volatility because it's not so much telling us what the volatility is now, it's telling us the average volatility over a 30-day period. So when we eliminate the period in which we had a massive surge of volatility, naturally volatility does drop. But we could derive volatility from two things. We can derive volatility from momentum, velocity, and speed. Okay, if we do see as rapid declines in price, with surges in volume, and surges or shifts in momentum, we can generally also assume volatility has risen. So although the volatility index has been dropping, volatility over the last couple of days has definitely increased, and we do have, again, factual proof of that, and the charts don't lie. Moving on to liquidations. Over the last 24 hours, we have seen, we've seen a decent amount of liquidations. We've seen $60 million in liquidations, and it's been quite evenly spread. We've seen longs liquidate, we've seen shorts liquidate, not really too much of a push and pull on either side, not really one side taking the cake. It's been kind of mixed between the two, and we do generally see that as we enter consolidation phases, we do generally see a little bit of a spread between longs and shorts liquidating as the price is pushing and pulling up and down, left and right, before it decides to make that move. And we'll discuss that in the short term today. The DXY has opened. And this is something we've got to talk about. This is really important. The DXY has opened green, and more importantly, the DXY has been able to open, and for now at least, remain above our major downtrending resistance, which is this diagonal resistance, which represents our current downtrend, okay? We are now out of the downtrend. And number two, it has remained above our short-term horizontal support, and of course, our higher time frame horizontal support zone. if we do fall below this horizontal support zone at around 100 on the DXY, the markets will absolutely rally. We're going to see the S&P 500 absolutely rally. We're going to see the Dow Jones absolutely rally. And again, we'll most likely see Bitcoin follow suit and even lead that in a higher rate of return and even move more aggressively, because it does have a higher, again, perceived volatility, and it does have a higher volatility in comparison to those traditional assets. But as I've been saying for the last few weeks, guys, we have a potential double bottom here. We have a potential double bottom. The confirmation was, number one, a daily bullish engulfing candle. Number two, a double bottom formation and break above our horizontal support zone. And number two, a break of our downward diagonal resistance. 3 points of validation. If this trend continues upwards, we are going to see the markets bleed more. We are going to see S&P 500 come down, the Dow Jones will come down, and of course Bitcoin is at risk of following suit. So we do have to keep our eyes on the DXY over the next week. Again, in the next 14 days, we have CPI, we have FOMC. All of these events can drastically shift the DXY and massively shift the market direction on the macro. So this analysis today is not greater than 14 days. And when we come up to FOMC, again, that can shift the macro perspective and macro direction, as the main driver of macro price action is economic data. Specifically for risk assets is going to be interest rates. So if the Federal Reserve come out and say they're pausing interest rates or they're moving down towards a pivot, of course, the perceived systematic risk in the market is going to plummet and the asset prices will continue to rise regardless of whether or not the short-term pullback was aggressive or not. Okay, keep that in mind. So let's look at the S&P 500. We have actually now found some resistance again. We've been saying for the last couple of days, we are retesting a major rejection zone. This is a 400-day long neckline resistance with deviation. Again, for us to see any sort of flip upside, if we want to see a continuation upwards, we're going to have to break below this support, or in this instance, above this resistance. If we do break above the resistance, our next major retest point is going to be 4,300. We still need to break above 4,300. If we break above 4,300, we then have this uptrending diagonal. We are currently in a rising channel formation. This is inherently a bearish structure. It does put it at risk, a greater probability of risk of some sort of pullback down the road towards this target. Now, this is where the fundamentals, this is where the economic and political decisions and data come into effect, as it doesn't matter what the technicals are so much saying or the structural price action / analysis is saying. If the Federal Reserve announce again they're moving towards a pivot or they're pausing rates, the price action is going to kind of disregard all of this. So from a structural stance, this is very important, but when we move closer to this economic data releases, it can either disprove or it can validate these structures on the chart, because again, structures are visual representations of how price action is moving. How price action is moving is completely dependent on economic policy, economic situations, again, maybe even social perspective, you know, what these assets are performing, how they're performing in comparison to other assets, and of course, betas and volatilities. All of these things influence asset prices and the direction of movement, but the main thing is, guys, the short term, we look at zones of interest, we look at support zones, we look at zones of confluence, we look at trigger levels, we look at gaps, we look at all these really important places where the price could go, but our economic data tells us what the direction is. So keep that in mind, guys. We are at resistance. Resistance is resistance until it is not, and therefore you should be short-term bearish on the S&P 500 until this resistance breaks. Same goes for Dow Jones, short-term bearish until that neckline of resistance breaks. If we get above it, awesome, great stuff. If we don't, we are looking for a move toward the dotted line. Now, if we do take anything from this, we do know the S&P 500 and Bitcoin is correlated to a degree of 70%, and therefore if these move down, we're more likely to see Bitcoin move down as well. And that is why, guys, we sold our purchase of $16,000 worth of, not 16,000, we bought Bitcoin at 16,500 to 18,000, that was a range, and we sold our entire bag of Bitcoin at 30,000. Telling you on this channel that we were selling at 30,000, making a very handsome, massive profit of around 88% on our spot bags, which is absolutely huge, guys. And it looks like we timed that perfectly, as we did see a lot of over leveraged longs into the market at and above 30,000. People were getting very aggressive on the Bitcoin purchases, and again, a lot of these longs are stacking. We saw a massive long liquidation flush, over $260 million of longs wiped out in 24 hours on that break toward the downside, and the trend has almost flipped. And this is a really important analysis today, guys, because we're basically on the edge of a cliff if you look at the price action. And we're going to start off with the higher time frames and discuss our zones, and then we'll jump into the shorter time frame price action, and in between those two, the high time frame short term, we'll talk about all of the technical indicators. So we'll go over everything today. Buckle up, let's get into it. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Currently, guys, we are retesting, well, we have lost now. We were retesting the $28,000 to $30,000 resistance zone. An incredibly important resistance zone. It doesn't look too important here on this chart, but if we zoom out and we drag it across, you're going to see how significant this level is. Here it is. We can see a few retests of this level in the bull market. This is our bull market low, okay? This is our bull market base of support for 2021 bull market. When we finally lost this level, we saw a significant crash of 40%. Now, here's the thing. We can confirm and validate this level as major support through 2 things. The reaction of price action above and below that level, okay? How volatile were the moves above and below? If we look at prior data, we can see we had a very volatile move when we broke above it, and we had a very volatile move as we broke below it. Therefore, we know this is a major point of confluence and a trigger point, okay? It is a trigger point. Number 2 is the amount of retests of this level. We saw numerous attempts and long weeks into this level, all of which were bought up during the first phase, especially after the first bull market high and correction. So we do know this is a very important support. We have now been retesting this for a few weeks, and I've been saying, while we're at resistance, we are at resistance. The macro trend is still up. The high time frame trend looks good, but we do have to be aware that a pullback is very likely from 30,000, and we have seen that. The question is now, since we are underneath the $28,000 to $30,000 range, how are we looking? Are we going to see a continued correction toward our next major support, which is 25.2 to 24.4, that being a 250 plus day long support level, actually over 280 now. We're looking around 300 if we come back to retest it. Or are we going to bounce here, right here, at the 50 EMA and the Gaussian channel? That is what we're answering today. So before we get into that, let's talk about the 4-year cycle. Then we'll get into the Gaussian channel, 50 EMA, technical indicators, and then we'll do short term. So 4-year cycle, another reason why that 30,000 is so important, guys, is because according to the 4-year cycle, we can see every single time we close above the prior cycle's yearly low, okay, circled it, you can see it's red horizontal solid lines. We end up going into a macro uptrend. And this is what I've been saying this entire time. We are not macro bullish yet. As much as you want to say we're in a bull market, always people telling me we're in a bull market. We're not in a bull market. We haven't been in a bull market yet. The bull market is a specific set of criteria that we need to check off for us to technically be in a bull market. I've been saying this entire time. We are in an uptrend. We are in a macro reversal structure. But we haven't officially reversed on the macro scale. And you're probably thinking, wow, why are you so pessimistic? I'm not pessimistic. We bought at 16,500 and everyone was saying go to 10,000. We bought at 16,500. We sold at 30,000. We did an amazing swing trade on Bitcoin. We were very bullish this entire time. In fact, we were telling people to buy this entire range when everyone was saying go to 10,000. But we are not blinded by our own greed and desire. We are focused on the data, the charts, and the technicals, and we're looking for reasons to why our narratives aren't going to be supportive. We are looking for flaws in our own decisions so we can better ourselves and make the best decisions possible. According to the 4-year cycle, we are not in a bull run. We are not nearly in a bull run. In fact, we are not nearly in a bull run. According to the data, every single bottom, we have seen significant rallies from absolute bottoms to when the bull run starts. In this instance, in 2015, we saw 300%. In 2018 to 20, we saw 232%. And in 2023 to 2024, we are most likely going to see 200%. We've seen massive reversals in play before bull runs start. A macro reversal is not a bull run. There are two separate things, okay? So when does a bull run start? Well, we need to tick off 3 things. And the 3 things we need to tick off starts with the most important one, which is a break over on the monthly chart above the prior bull run yearly low. In this instance, that is 30,000. We need a monthly candle above 30,000 to break that yearly low and flip that strong support, or now strong resistance, into support. We saw it happen here, and we saw it happen over here. In this instance, back in November 15, we saw about 3 months of consolidation just below that yearly low before we actually continued upwards. That is definitely a possibility this time. Number 2 is we need to clear the first dead cat bounce high of the prior cycle. Look at the dashed red line, the dotted red line. Every single time, guys, we break above that dotted red line on the 4-year cycle of the prior high, we end up going into what we will call a parabolic phase. If you look at the percentage of green compared to red candles after we break a monthly candle above that line, there is basically only green candles from there onwards. And the red candles are very small, generally eaten up. The wicks are quite large. We have a lot more volatility. We have a lot more momentum. We have a lot more volume, and we have an all-time high in sights, okay? Number 3 is the date range trend in corresponding with the Ichimoku cloud baseline. The thick red line that is moving between the charts here is representing of overall strength of the trend. We generally need to break through that. Now, coincidentally, we see a monthly candle break above that. At the same time, we see our date range trend break. Date range trend being the average length between bottoms to bull run starts. In this instance, it is 17 bars, which will take us to around March to April 2024. So we do see all 3 of those things. That is when we're technically in a bull run, no sooner, no less. But that is why 30,000 is so important. So let's talk about, guys, the technicals. What we're seeing here is really important stuff. We'll start on the Gaussian channel and the 50 EMA, and then we'll jump over into the short term. So we're seeing a retest of the Gaussian channel upper band and a 50 EMA. 2 incredibly important, I'll show you one at a time, 2 incredibly important indicators when it comes to determining not only the short-term strength, but potential continuations in trend. Now, these indicators do not tell you reversal points. They're not here to tell you where the trend is going to reverse. Again, reversal points, you need to use structural analysis to determine, but they will determine whether or not this trend will continue in this direction or potentially find a degree of support in which we can use structural analysis to again determine reversals. So currently, if we do find support, we're going to have to find it here. If we do find support, we're going to have to find it here. If we do not hold above this local low at $27,000, the most likely scenario is we move back down to retest the midline slash the 25,200 major horizontal support represented by this green zone. Okay, so we do not hold over 27,000. I expect one of those 2 things: a retest of the midline, which will take us to 26,000. Okay, we'll talk about that on the short term. Or if we break the midline, a continuation, guys, to 25.2 to 24.4. Incredibly important. Let's take a look at the Gaussian channel again. If we look at that Gaussian channel, guys, every single time we break from the top side in, I'll show you on the daily chart, from the top side in, so going up, above, down. If we break below the upper band, we generally either continue to the midline or we continue through the Gaussian channel. This is one instance here. Let's scroll back. Top side down, okay, from green, top side down. We break through the Gaussian channel. This is the daily chart. We can see it over here. We actually use this to predict the bull market top. Break through over here. Once more, break through. Every single time we break that top band on the Gaussian channel, we either move to find support on the midline or we break all the way through. In this instance, you can actually see how that midline, how that upper band can actually provide support during bull runs. And this isn't common, this isn't rocket science, guys. We can see the Gaussian channel is a phenomenal tool at predicting the strength / continuations of higher time frame trends. It does not miss with this stuff, guys. You can see right there, we just showed you every scenario going back 3 years on a daily chart of how accurate this can be. So it is an incredibly important level. We are quite literally on the edge of a cliff here. We do need to find support here, or Bitcoin is going to move to $26,000 or $25.2 thousand. Incredibly important stuff. Keep your eyes on it. Another thing, guys, the 50 EMA, again, phenomenal tool on the smaller time frame to predict shifts in trend strength. Particularly, what we're looking for is, if we do lose a 50 EMA, we want to see these smaller time frame move averages cross over the 50 EMA. You can see in this instance, we did not have that. We didn't have the smaller time frame move averages cross below the 50 EMA. That meant this was deviation. This was a fake out. This was a retest of low support. It wasn't a shift in the trend. The uptrend was still very intact. If we do break below the 50 and we have these smaller time frame averages drop below, and that will take some time, that will develop over the next few weeks if it does happen, and I do not expect that to happen unless 25.2k is lost. That will result in a shift in the uptrend. That will turn this uptrend into a downtrend. Right now, we are still in an uptrend. Keep that in mind. Right now, this is still an overall uptrend. However, we have retested major resistance, we have rejected quite strong for our resistance, and now we're approaching a point where we're retesting the uptrending support. If we fail to hold above the uptrending support, we're going to see a higher time frame correction, that potentially being triggered upon the loss of 27,000, which could take us much lower. Let's get into the short-term analysis, guys, and talk about our zones. So we'll go basically take everything we just heard and we'll apply it now to the short term. Our zones, our levels, the key tests of retest, key to support levels, all that kind of cool stuff. So short term, what you're seeing here is the price action on the 4-hourly chart. Specifically, we saw a short-term uptrending support line represented by this diagonal. We had numerous points of retest. We had an established uptrend. This established uptrend was lost a few days ago. We're talking about 4 days ago now. We saw a significant drop to retest our next major support, sitting around 28,000. We broke below 28,000 and we have found a temporary support between two significant ranges. We have short-term supports developing in here. We don't need to worry about that. We'll focus on the major support zones. The next major support zone is going to be 26.7 to 27,000, guys. A really important support zone. Again, we can use the VRPV to validate this. As you can see on the VRPV, the moment we drop below this 27,000, 26,700 zone, we actually have a significant drop in the VRPV. What does that suggest? Well, it suggests a zone of weakness. In another word, it represents an area of the price action on the chart according to historical orders where orders have been significantly lower in comparison to ranges up here. So in essence, it represents an area of low resistance, okay? Low resistance. And if we have an area of low resistance, we require less volume to push through. And if we require less volume, we generally have increased speed and increased velocity of price action. And with increased speed and velocity, we know that we'll have increased momentum. So if we do see a drop below 27,000, we are going to see quite a fast move, okay? Quite a fast move down to around 25.2, or this is where the midline of the Gaussian channel comes into play in the day, or 26,000, as we have a decent little chunk of support between that 27 to 25, which is sitting at 26. So it happens to be the midline of the Gaussian channel as well. So keep that in mind, guys, for the short-term targets. Now, if we do continue down, that is what we're looking for. That is what we're looking for. What we're seeing right now is a price action develop. We saw a nice correction. We've seen a retest of 28,000. Again, we have got rejected. Now, for any sort of correction toward the upside or continuation toward the upside, we need to see two things. We need to see, number one, a break and reclamation of 28,000 and the POC level on the VRPV. POC level represents the highest point of control, okay? Point of control, POC, it is the highest point of resistance on the chart on the horizontal scale. Therefore, this is strong resistance right now. This level is strong resistance. If we break strong resistance, it becomes strong support. And for us to start climbing upwards, we need to create a base of support at this level before we break below this level. Okay, guys, so we do need to keep that in mind. We do need to break upwards above 28,000 before we flip short-term bullish. Until then, on the short term, you should be looking for points to short, should be looking for pullbacks to occur, and triggers for those downward moves to continue. If we break above 28,000, the narrative should flip. You should then be looking for reasons to take longs. Where can you execute a longs? Where your triggers can be for longs? What coins are lagging to potentially get into for longs? That is where the trigger flips. Until then, the narrative, the bias, your probabilities, your statistical advantage is still in the favor of shorts currently until 28,000 flips. It flips slightly towards a statistical advantage or edge while taking longs. Okay, let's take a look at the very short-term time frame, and then we'll finish off the video. So, yeah, quite an aggressive, guys. Quite an aggressive crash right there. Quite an aggressive drop over the last few days, but more importantly, quite an aggressive retest of 28K and rejection. But you know, this price action has been very choppy, and I don't blame a lot of people for getting liquidated, especially if you're quite inexperienced in this market, because the price action has been choppy. And again, even looking at this, I don't really see any structural patterns that are really just popping out to me, besides, of course, this falling expanding wedge we had here. Sorry about that. We did see quite a move upwards, but again, it didn't really go anywhere. It got suppressed by this resistance. Currently, since then, we are developing some sort of upward trending support on a smaller time frame. Again, not a very strong one. If we go ahead and clone that to the upside, let's see if this matches up. We do have a potential rising channel formation. So we saw a descending, expanding wedge, bullish pattern. We saw a reversal from that. We saw a very, very weak reversal. It was unable to break through our immediate short-term horizontal resistance. We've now developed a potential rising channel formation. Again, look where that rising channel formation takes us, around 23,000. If we do lose that level, we're very likely to move back into this range. And of course, we already know what happens if we lose that level. We need to invalidate this rising channel formation to see any move upwards. Again, the invalidation point is a greater than 28K. We can see that again, according to our structural levels and our VRPV. So nothing changes from the short term. Everything I just said, still very much intact. I'm not going to do a short-term TA. I think this structural analysis is good enough for today. We'll update on tomorrow's video, guys, if anything changes. Until then, keep doing what you're doing. Keep following the short-term price action. Pay attention to the macro, guys. We have a big week incoming. Again, the DXY determining the direction of the asset prices this week. Pretty big and a lot going on. Thanks for tuning in. Catch you guys tomorrow.